Hello everyone, this is Janson, and it's been quite a while that I haven't done a YouTube video. Now, it wasn't intentional. I was busy with some other work, and one of the work was creating my website. So, I published it. I think day before yesterday. So, this is the website. I have put all my content on this, and we have a few blogs as well. I have connected my YouTube and LinkedIn, so feel free to go ahead and check this website and let me know what else you want me to add on this. It will be really helpful, whatever you're looking for. Even I have this frequently asked questions for now I have put just 3-4 of them. More questions will be added and more answers will be added to this. So if you have any questions on my courses or something like that, feel free to ask it, and I'll be putting those questions on this. So yeah, I'll put a link on the description, and without further ado, let's start with our analysis. So let's start with the Bank Nifty. So Bank Nifty has been in a consolidated mode for quite a long time. We have it did reach to the 618, which we have previously predicted. So this was the 618 zone which I was talking about. Now, what you can see over here is market is it doesn't have that much of strength. Like every time it is every time it is trying to make a new low, the buyers are pushing it back. So we have this a falling wedge over here, plus we have this RSI divergence as well. So there are chances that it can blow past and go towards the upside. However, let's say that we have this structure which is holding over here. So if we have a break and close below this, then we can expect the market to come down till, let's see, come down till around somewhere over here, 3500. So, and that even makes sense, because if you look left, we have a good amount of structure over there. So this is the area which I'm looking at. If at all, if it is breaking below this, so you can either go with the aggressive entry. Most probably it will just fall down. So now this depends completely upon how you trade, meaning whether you are a conservative trader or whether you are an aggressive trader. If you're an aggressive trader, you most probably will wait for the market to, not most probably, you have to wait for the market to break out of the structure and enter immediately. If you're more of a conservative person, then wait for a pullback. So basically you can wait for the market to break out, do a pullback, and then go for the entry. So this is what I'm looking for. If it is going back up, my immediate target would be around here, wherever the previous structure was. Now that is over here. Let me remove this pattern, and the next one would be around this zone. So that is so it is in a confused state. So I intend not to play in between this range, but I'm quite sure that if it is breaking out of this range on either of the side, most probably it can go to either of this level. It might test the 3500 as well, and there are chances that it can test the 3500 level as well. So have a watch on this. HDFC also has the same pattern. So basically we have a pattern which is reaching out over, let me see, which is getting completed over 1372, and look left, we have quite a lot of structures as well. So do keep in mind about the spikes over here. Let the market break out of these spikes. Okay, once we have a strong candle confirmation saying that the market is planning to go down, then you can go for an attack. But about this pattern, now once it reaches here, you should be looking for a long opportunity, because that is what these patterns are all about. So if it is going up from here, you can expect the market to go up from let's say that it reverses from here. If at all it reverses, then you can expect the market to come down to this level and then go back up to one is the 382 level, that is the 1475 level, and the other one is at 618 level. So we need to wait and watch for this. So on Monday, if you have an opportunity where we have a breakout on the downside, then you can expect the market to go up to 1372 level. If it reaches and if it gives you a reversal signal, any kind of reversal signal, it can be even a strong candle confirmation as well. For me, I always wait for a pattern breakout. So if I have any of those things, then I'll be looking out for a long opportunity in this area. Okay, and my target will be according to this Fibonacci which I have drawn. So that's about HDFC Bank. Okay, let's look at HCL now. Now HCL, it has reached to its previous structure, retesting the previous structure over here. Now it didn't just go back after the previous retracement. So this was the move, impulse move up. It did a pullback, but it did some patterns over here and then moved up to the previous structure, and we can see some candles getting weaker and weaker. Also, we have a pattern over here that is a bat pattern, I believe. So this is the pattern which is getting completed over here. Also, we have a equal measured move as well. So this is the equal measured move. Yeah. So everything is indicating that there are chances that the market can do a pullback after this. Now, till where it can do a pullback, let's draw a Fibonacci retracement from this A to this D completion, and you can expect the market to reach 993.90 as your first target, and the second target as to the 618, that is the 956.60. Now, let's say that if it just blows past this X point over here, that is the previous structure over here. Now, if it is going beyond this, then let's take up the Fibonacci extension just to understand till where it can go. So pull back, we have 127 over here. We can target over 1.272, that is 1141 flat. Also, we can try drawing the inversion. So let's see whether we have any confluence over there. Not really. We don't. We do have a confluence over. Oh yeah, we do have a confluence on 127 and 1414. Let me change the color so that it will be easier for you guys to understand. Yeah, 1.272 and 1414. So that is a good confluence area. So if it is moving past that, you can expect the market to reach to this zone, or you can expect the market to reach to this particular zone. So this is what I'm seeing on HCL Technologies. Alright, coming to the Forex market, I have gold chart in front of me, and gold is in an interesting zone right now. We have a double bottom over here. So market came down, we put in a retest, and look left where it has done it. So it is at a very strong structure. We have a double bottom, but we do not have a break and close above. If you look in the daily time frame, so this is the neckline which we wanted to break. However, the market just went over there, spiked, and then came down. But here's the thing, whatever you're seeing on the daily time frame may not be always the correct thing, because if you go down to the 4-hour chart, so that is this one, This is the neckline area. This was the maximum structure which it has made in the double bottom, and that was broken. Okay, and right now the market it has done a pullback over here. So this is the zone which I'm interested in. So if the market is not violating this zone, then I am on the bullish side. Okay, now let's say it violates. Okay, then there are chances that the market can come down to this come back to this previous structure over here, making it a triple bottom over here. Again, a reversal sign. This can happen again and again. That's what the gold is known for. But at the same time, this is not a small zone. It's quite a lot of pips on this one. So that is around 493 or something pips. So that will be around $49 move. So that's a huge move. We are on the 4-hour time frame. For intraday traders, you can get in, get out, shorting this every now and then whenever there is a pullback. But if you're a swing trader, make sure you're having a good risk to reward before you enter onto this. So if it goes up, let's say we have a break and close above this one, if we have a break and close above this structure, then what I'm expecting is the market to do to come down to around 1800 level. That is where the pattern also gets completed, I guess. So X to A to B, C and CD 1800. No, yeah, almost around there, and again at the previous level of structure as well. So from here you can expect the market to reach till there and then do a retracement again. So do watch out on the goal. A good opportunity is waiting. So yeah, that's about it. Coming to Euro USD, I know quite a lot of traders who have got stuck on this this zone where market has done a classic breakout and pullback. So what I mean by that is we have a breakout of the previous structure over here. We did a pullback, again a breakout, we had a pullback, and we have the standard rejection candle, that is the pin bar, which is really nice if you look at it in this way. Now I'm in the replay mode, nicely rejecting the previous structure over here. And there is nothing wrong if you got involved in this. It's a standard procedure where you'll find a reversal candlestick at the previous structure. You just go ahead and short that thing, right? But the point is, the next candle, it just went it was really strong candle over there with a very minimal spike. And after that we got this candle. Okay, where is it? Yeah, we got a hanging man. Now this is a confused situation for most of them, where it might go. Most of the thing that since the spike is on the downside, there are chances that it can go up. This candle doesn't mean that way. This is called the hanging man pattern. So basically this is a reversal again for them. Okay, the reversal of the pattern. But the thing about it is, quite long back I have mentioned about the pattern over here. So I'm expecting the market to do at least a 382 retracement. Okay, so that is around 1.1945. My goodness, this level. All right, and another thing which is why I'm saying this is I got another reason for that. If you look at the weekly candle, let me remove all that. We got a very strong bullish candle. Okay, a very strong bullish candle over here. So this candle might be an indication that there are chances that the market can do a pullback. Okay, most probably somewhere over this zone. This is a small pause, the market which it has done. If you don't understand in this time frame, let's go to the lower one. Oh yeah, yep. And let's narrow this down. Let's draw some Fibonacci retracement as well. So we have 618 over here, so let's make that as a zone between 618 and 786. So if we have and another reason why I'm saying that it can go down even more further is there are quite a lot of reasons why it can go down further. So one of the reason is we have bearish divergence. Yeah, there are possibilities that we might have a head and shoulder over here. It's not a confirmed one, it is just a possibility. I draw this neckline in the straight horizontal manner, so when I have this structure breaking, then there are chances that it can go towards the downside. Plus the 4-hour time frame also, it is showing a rejection over here. So yeah, multiple reasons to short, but I think I would leave Euro USD on Monday. I don't want to trade on Monday, especially on this Euro USD, because to be honest, it's not a clear picture. So basically, when the market gives me a correct picture, basically, so when I have a strong directional bias, that is the time I will be looking for short entry or a long opportunity. Now let's say that the market has broke out of this structure or something, then that will be a different case altogether. Then my direction will be on the upside. So a confused state on the Euro USD, but a good opportunity at the same time. Only thing is I do not have a strong directional view on this. So once I have a breakout on this, of course if you're trading on the lower time frame, for there will be quite a lot of patterns on this, so that is another option on Euro USD. But if you're more on the swing trading side, then I would suggest you to wait for a breakout on either of the side, then only analysis will do good. So that's about Euro USD. Okay, GBPCAD is another pair which I'm keeping it on my radar. A simple reason for breaking out of all this structure over here. There's quite a lot of spikes over there, and we have a very strong bearish candle over here. Now let's go to the lower time frame and see where the structure can where this can go down to low. So we can say by looking left that there are chances that the market can go and test this level. So let's draw one line over there. Yeah, quite a lot of time the market has tested those structures. So let's see whether that makes more sense by adding a Fibonacci level on that. So let's take the Fibonacci extension from this. So swing high to swing low, back to where we started. We do have 127 over here, so that is a good zone, 1.705 level over there. And let's try inversion as well. Not sure whether that makes sense. Let's see. Yeah, 1414. Let me change the color for you. So that is over there at the same level. Most probably we might have a equal measured move as well, so let's find that out. So let's draw this impulse move, clone that, and then let's see, not exactly to that level, but in and around that zone itself. So this will be a good target area. Now how do you enter this? I'm on the 4-hour time frame, so you can definitely wait for the market to do a pullback and then enter if you're on the swing side. If you're on the lower time frame, whenever you find a pullback like this, like let's go to the lower time frame first for a change on this. Yep, let me remove everything, otherwise it's going to be tough. So we do have a small structure over here. All we need to do is wait for the market to do a testing over here, retest over here, and let's draw a Fibonacci for this one as well. Doesn't make sense to draw a Fibonacci right now because we do not have any indication of the market changing its course. So unless we have a pattern or a candlestick pattern over here where it is telling that the market is planning to reverse, then only we should be drawing the Fibonacci. So this actually this Fibonacci doesn't make sense. So what we can do is it's just falling right now. We just need to wait for the market to test this level, and then we can go ahead and attack for a short on this. Target level remains the same. Different ways are there to take a short on this. Some traders book half their position and move their stop loss to break even. I'm a big fan of that. More about that in the coming sessions, in the future videos basically. But some of them, they just enter exit just for on the short side, so that also you can do. This completely depends upon what your trading style is. So whatever your style is, be on the shorting side unless we have a strong confirmation saying that the market is changing its course. So that's about it. I hope you guys enjoyed this video. If you did, hit that like button, and I will see you in the next video. Thank you, and have a great week ahead.